Can you get approved for a mortgage loan while being out on disability or workman's comp? The answer is yes, it's possible. It just has to be documented properly. And here's how we look at it. If a short-term disability, then short-term disability can be tricky just because of the term short term. How long are you going to be out? When are you looking to close on your mortgage? When do you start back? What was your income before you left? What percentage of your income are you getting while you're out on short-term disability? These are all questions that the lender will ask you, and you'll have to verify. So if you're going to say close in 45 days, but you don't go back to work for 60 days, you may be fine because you'll be back at work on your normal salary, as long as they can confirm that you're going to come back on your normal salary or your normal pay before your first mortgage is due. Now, if it's going to be longer and you need to close on that home, and you won't, and you need to close on that home before you go back to work and before the first payment is due, then you're going to kind of be stuck with using 60% of your average salary to qualify. If you can qualify with that, then you're good. If it's you and a spouse or another cosigner, you may not need all your income and still meet the debt to income ratio requirements. So that may be good. Your employer would have to verify that you actually have a confirmed start date to come back to work. And they would also have to confirm that you're coming back at the same pay or more than you left. So it can't be like you're coming back in a different position, or we'll see where we can fit him or her in. They have to confirm that you have a start date and when that start date is. So that's the important part. The long-term disability, this is more favorable for mortgage approval because it's ongoing income. So but usually when we say ongoing, if you're going to purchase it and you're on long-term disability, it's going to have to be something that's going to be at least 3 years from your close date. So these benefits, some people have real serious injuries or they have real serious medical issues and their job provides them long-term care, or they bought a long-term disability policy. You can purchase with that policy as long as you have a 3 years worth of continuance from the time that you close on the home. So it's actually your close date, it's not your application date. So that's something you want to do. That will have to be verified by the insurance company that's paying you out the dividends and everything. So that is some documentation you want to get up front and let the loan officer know, or myself, so that we can make sure you get pre-approved. This is also something you want to get approved before you actually go get a home under contract, to make sure the underwriters are looking at it the same way that you are or you want them to do. Bonus income is a bonus is that non income is non-taxable, and it may be able to be grossed up. So if it's long-term disability, then you're not paying taxes on that. If it's and so that we can gross that income up, usually 15%. So that could help you qualify, whereas you may be getting less than you would have made on your job. We can gross that up and help you to qualify on that. The trickiest thing is workers' comp income. Workers' comp, usually it's acceptable if the benefits again are expected to continue for at least 3 years. Again, 3 plus years, and when we say 3 plus years, we mean 3 plus years past your close date, for that to qualify. So if you have where you're free on workers' comp and you're like, hey, I probably won't be back at work for a year, that's not going to work. You have to have something seriously wrong, or you have a great policy where you're going to be paid a minimum of 3 years and a day after you close on that home. So that's something that's something you'll have to get from your insurance company or the provider. So really, no matter the type of benefit, you're just going to have to provide documentation. That's the important part. You need an awards letter, recent payment history, or bank statements showing that you're actually receiving it on time and all the time. You'll need documentation again showing how long these benefits will last, an explanation of employment status for future plans. Like, do you ever plan on going back to work? Are you on long-term disability and then just plan on switching that over to SSI disability? Those are the big things. The takeaway with this is that you can get approved. So don't just not apply because, hey, I'm on disability or my spouse is on disability, we won't qualify. If you can show some stability as far as when you're going to go back to work, or these payments are going to continue for at least 3 plus years after I close, and they can all be documented, you can get approved for a loan. So every situation is unique. So getting pre-approved is still the same thing I say all the time. Getting pre-approved early will help you know exactly where to get started and what you can afford and what you can't afford. So if you or someone else is in a situation, please reach out and we'll help you. We'll do the best we can to get you approved. You can reach me at 404-461-3172 or reggieloans.com.